Hello and welcome to your L6M3 LO4 revision question. I'm Laura from Business Academy Online and I'm going to be taking you through this question now. The question, guys, balanced scorecards. Discuss how a balanced scorecard methodology can be applied to the measurement of performance in supply chains. So we can see here that this is 25 marks. And I picked this for a reason. Students seem to have this mental block and hatred for the balanced scorecard, when actually it's a really simple thing. And so I'm going to go through all of this and help you get those 25 marks if this question comes up in your exam. Let's start by what we are going to define. It's always a good idea. You know now at level 5, you start with a definition. Come on, guys. So we need to say that the balanced scorecard is a benchmarking tool that was first created by Kaplan and Norton. There are now many other versions, and you'll see in the CIPS book, if you have it, that they've thrown in the kitchen sink, basically, with all the different versions. But I have a soft spot for the original, and I think we should tell the examiner, hello, examiner, we are using the original balanced scorecard. You don't actually have to say hello to them, just to be clear, though. And it's called a balanced scorecard because it is balancing financial and non-financial aspects. And essentially, all it is a benchmarking tool that you are benchmarking yourself, or like in this question, your supplier, against these different areas and setting areas to improve and metrics from that so that you can measure it going forward. So that's the balanced scorecard. Let's look at these 4 areas though. Here you see we've got financials, internal business processes, learning and growth, and customer. So remember, this is the traditional. There are different kind of word choices that they'll use in these 4 different sections, and there are different versions of this balanced scorecard. So financially, these include traditional financial indicators which measure the kind of financial progress, shall we say, towards the achievement of your strategy. And it gives shareholders the information that they need. So here we'd look at things like financial ratios and so on. Internal business processes are your main business processes like production, logistics, sales. And then this allows you to set goals related to things like quality, time, efficiency, cost reduction, and all that jazz. Then we've got learning and growth. These are things about employee development, retention, skills improvement, innovation. You might be looking at things like research and development, and it's all about continuous improvement. And then finally, we have customer. So here we're setting goals which relate to the customer's perception of our business. These could include measures like customer satisfaction levels, number of referrals, market share, target market penetration, all of that sort of thing. However, this is if we are looking at this on our own organization, but that's not what the question asked us for. Context is key here, guys. The question asks for how the balanced scorecard can be used to evaluate supply chain performance. So in other words, it's how the balanced scorecard could be used to evaluate suppliers. So our introduction has to be, what the balanced scorecard is, why it's used, in terms of a benchmarking tool, and that it balances financial and non-financial. And then you can go into each of the 4 areas and explain what we're looking at here and how you can set goals or metrics from this. But you have to relate each of the 4 areas back to supply chain performance to get the marks. I've seen so many students who truly understand the balanced scorecard miss out on around 10 marks for the context of the question. Read the question carefully. So let's drill into this. Let's apply each of these 4 areas to our supply chain performance. So we might be looking at the credit rating of suppliers, using Dun & Bradstreet or whatever credit rating agency you may use. Checking financial ratios like liquidity ratios, profitability ratios in terms of gross profit, net profit, return on capital employed. You may be looking at gearing and seeing, ideally they're under 50% geared because obviously gearing is about long-term loans. So the more gearing that your supplier has, the more hardship they'll have if hard times hit. They'll find it very difficult to pay back their commitments and so on. So All we need to do is explain these things and say that we might want to set a percentage or a ratio figure. So for example, with a liquidity ratio, you might want to see 2-to-1 and so on for the current ratio, whatever it may be. So you can set goals for your supplier, and that's how you can monitor it year on year. That's the financial side of it. The vision and strategy in terms of internal business processes. Well, we're going to monitor KPIs. These can be both qualitative and quantitative, but here it's much more easy to talk about the quantitative ones, the on time in full, the OTIF deliveries, the price increases, especially in this current day and age, everything's increasing, isn't it? Time taken to respond to orders, the lead times in general, and so on and so on. So we can kind of monitor these again. Because remember, the balanced scorecard is only a snapshot in time. But if we are doing it yearly or every 6 months or every quarter, you can kind of track the changes between those. Learning and growth then. We could look at things like their employee retention levels, the training schemes of the suppliers, research and development, looking at actual figures like the number of new innovations that have been successful, the amount spent on research and development and continuous improvement, and so on. Now, obviously, we rely on the supplier to give us this information to some degree, but there are some information online, company's house, that sort of thing that we could potentially use, potentially being the keyword there. And then finally, customer, vision and strategy for the customer. So you set goals which relate to your perception. You are the customer. We, the buyers, are the customer of the supplier's organization. So what's your customer satisfaction level? What's the supplier's target market penetration? What's their market share? Who are they working with? You could speak to maybe other clients of theirs if you are aware of them, and get their kind of feedback. But remember, in this case, we're the customer. So we're looking at maybe speaking to our internal stakeholders and asking for their satisfaction of the supplier's service and so on, as well as the monitoring of the performance of the supplier for us from year to year. So all of that can be applied to the supply chain. So the use of the scorecard, it allows you to benchmark these areas, as I've said, and check for trends over time. However, remember that once you've done a balanced scorecard analysis, it's pretty much out of date straight away. It's a snapshot in time, just like a ratio is. And it doesn't take everything into consideration. It only looks at those 4 areas. So if you want to kind of get a little bit of critical analysis in your conclusion, you need to be talking about how maybe there should be more of a focus on sustainability in here and other factors such as that. So this is a little bit of analysis just to add to the end. I hope you found that useful. Thank you so much for listening. Please do subscribe to our YouTube channel. We'd appreciate it. And we've got a Facebook group, CIPS Training, as well, if you want to join us. So thanks so much for listening. I'll catch you back with another one soon. Bye for now.